Good morning everyone and welcome to Morning Markets from True Potential. This morning I'll be reflecting on stock market performance over the past 24 hours, then looking at a couple of key economic data points that have caught my attention. Equity markets were positive yesterday. We saw the FTSE 100 up 0.9%, whilst the more domestic UK FTSE 250 was also up 0.2%. Over in the US, we saw strength from the S&P 500 up 0.4%, whilst the Nasdaq was up ever so marginally, up 0.1%. Over in Europe, we saw strength as well, up 0.5%, which the returns were good based on a big batch of strong Q2 company earnings in its busiest day yet for reporting. We saw a number of companies announce new buyback programs, report higher dividends, and upgrading their future expectations for earnings. Corporate commentary highlighted the favorable demand backdrop and expectations for the input prices, which have been rising, to perhaps linger a little bit longer. We saw basic resources and energy among the biggest sector outperformers, helped by the results from Royal Dutch Shell, Anglo American and Total. We also saw a bit of improvement in just general sentiment, which helped push global equities higher, where we saw attempts from the Chinese state media to ease some of the concerns about the recent sell-off in Chinese equities. Overnight, Japan was a bit weaker, down 1.8% after reports that the government is set to expand their lockdown measures in order to curb some of the rising infection cases. In bond markets, very calm, not a lot to report. The UK government 10-year yield traded flat, currently trading at 0.57%, and similarly in the US also trading flat, the US 10-year trading at 1.24%. In commodities, we saw a little bit of weakness, giving back the gains from Thursday. So the oil Brent crude was down 0.7%, now trading at around $74 per barrel. Gold was a little bit weaker, also down marginally 0.3%. In currencies, we saw a bit of fluctuation over the past 24 hours, but the general price trend movement was flat. So sterling was trading at 139 against the dollar. It did rise to 140, but it came back overnight. And against the euro, it's trading at 117. Slightly busier day in terms of the economic calendar yesterday. A couple of areas that caught my attention. We saw European sentiment reach an all-time high, reflecting the positive outlook which businesses and consumers have. This indicates the economic rebound is in full swing. The reopening of economies is boosting the service sector activity, and manufacturing continues to perform well. If we look at the order book from manufacturers, it remains very healthy, but production may be slightly constrained given the input shortages. Higher input prices are coming through for companies, and ultimately that may end up with higher prices for the consumer. However, the overall picture remains bright. In Germany, we saw improvements in the labour market. So we saw the unemployment rate coming at 5.7%, lower than what was expected, which was 5.8%, and the previous month was at 5.9%. So that's good news. The data showed that businesses are hiring more to really cope with the strengthening demand environment. While this is good progress, there are still 309,000 people unemployed compared to this time last year, at the start of last year. And there's 1.5 million workers continue to receive state wage support. In terms of what I'll be watching out for today, well, we'll get GDP figures from across Europe. From the US, we'll have personal income and spending, as well as the final reading from the University of Michigan Consumer Confidence, which will conclude the day. That's all for today. Thank you for listening, and we'll see you next week.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.